Hello guys, this is Colin and this is Colin Talks Crypto. I'm bringing you this video out of my patio. It's windy as heck, so hopefully this microphone's working. I got this gigantic squirrel-sized pop filter on it. So this video is going to be about capital retention. And so I've been around for multiple bubbles from 2013 all the way to 2018. By the way, this video is being recorded in early December 2018 for posterity's sake. And I'm really making this as a video to myself, but I'm sharing this because I want you guys just to see how I think, and maybe you can learn something from it, and maybe I can learn something from you if you have a better way to approach this. This is how I'm currently looking at things. So, the problem, I'm a holder. That's a good thing, but when it comes to holding, I hold like ironclad fist. Like, I will not sell, and to a fault, right? Because the whole name of the game here is make as much profit and, of course, help humanity as much as possible with crypto. But if I just hold and I never sell, I never get back that initial investment on my original investment, that puts me at a high amount of risk. So, and I have taken a very, very, very small amount out of my initial crypto holdings, but it's so disproportionate that I just hold and I never sell. And I actually woke up in the middle of the night and I thought of the title of this YouTube video. So I'm thinking, how do I maintain my capital holdings through the boom and the bust cycles, through the bull and the bear markets? And this came to my radar this last cycle because as crypto approached December and it went sky high, so did my portfolio, as many of yours did, unless you got in too late. And when it got super, super high, I just held and I held and I held and I held all the way through it, and I didn't sell because I just am accustomed to holding. And that's a very conservative long-term strategy, and it works well. And I can't say there's really necessarily a fault to it. But when you do the math and you look at the gains that you could have by selling at the peak and then rebuying toward the bottom, it's pretty crazy to think that I could 12x my holdings, for example, because I'm down about 12x right now from the all-time high, versus just holding through the whole thing and still coming out on top, but always wondering, could I have 12x'd my holdings? So that's what this video is about. Thank you for joining me. This is Colin Talks Crypto. All right, guys, so let's do a little experiment here. So I'm not going to divulge my actual portfolio amounts, but let's do an experiment. So right now in your mind, think of how much your portfolio is worth. I'm thinking about how much mine's worth. Okay, let's call that figure A. Okay, now let's multiply that figure times 50 and call that figure B. So, and I picked 50x because that's the amount that I easily see my portfolio increasing during the next bull run cycle. I actually see it going up more than 50x, but that's my start to sell point. That's the point where I'm going to start to liquidate some of my holdings. So whether you said $100,000 for your point A, or $1,000 for your point A, or $1 million for your point A, it doesn't matter because you're going to 50x that for this thought experiment and come up with your figure B. And for the sake of this video, let's think big, okay? Let's pick $1 million as our point A. So what would that put me at for point B? Well, that'd put me at $50 million for point B. So I believe that if, for example, if I held $1 million of crypto at point A, in the next bull run, I'm going to easily surpass $50 million. I know it sounds incredible, but let's get over that. You can see some of my other videos if you don't believe the amount of growth possible in these bull runs. And I'm not really speaking to that audience. I'm speaking to the guys who have been here and who've seen those tremendous gains, who are not even doubting that that's possible. We're not talking about if it's going to happen. We're talking about when it's going to happen at this point, okay? So when it hits that 50 million X, or for example, if you were at $100,000 on your point A, when it hits that 5 million total value holdings in your portfolio, etc. Okay? And the reason I'm making such a big deal about this is because I've realized that when you're in the hype of the moment and when you're riding that bull run up, it's very exhilarating, of course, right? Because you log into your portfolio app every day on your phone and it goes up by huge amounts. It's like percentage gains every single day for days and weeks on end. And it's quite the high, right? And it can be such a high that it's actually a bit interfering with your ability to think rationally and to sell at the appropriate times. So I've realized that, and I've learned that it's smart to plan in advance, to set some thresholds to take action in advance. So that point B becomes very important. And you can adjust that 50x multiplier to whatever you feel is appropriate for the next bull run to get your point B, which is the point where you start to liquidate some of your assets, the point where you start to sell. But again, I'm picking 50x because that's what I believe. And I think that we're going to see our next bull run peak in, at this point, at the earliest, mid 2020. But I think it could actually go a little further than that. I think we could be seeing 2021. I'm not really sure exactly. The correction seems to be taking longer than I originally anticipated, and admittedly so. So I'm now extending my prediction for the next bull run peak to mid 2020 or later. I'm not exactly sure. I'm going to have to reevaluate that. But this video is not about when, it's about at what point, at what dollar figure to start pulling that sell trigger. Okay, so, and again, this is a video to myself so that I do not miss the boat on this. And the reason I say this is because I want to maximize my capital, as I'm sure you guys do. You know, why ride the price up and then ride it back down over and over and get mediocre gains when you can ride it high, sell it high relatively safely, ride it back down, buy back in, and ride it high again for tremendous gains, probably 10x more than you would have had, right? And to do this, it's really important to note that you have to be over 20% gains at a just base minimum before you start to sell, to even break even because of taxes. I am a law-abiding citizen, I pay my taxes, and so right off the top, when you sell, any capital gains is about a 20% tax incursion for long-term capital gains. I only hold my crypto for over a year before I sell. I will not incur short-term capital gains because it's already too excruciatingly painful to incur any kind of taxes, to let alone pay 40%, for example, on some trades that I made with my hard effort. But I'm not out to break the law. So the way I can minimize that tax pain is by holding my crypto for more than a year. So I'm doing that. I'm holding my crypto for more than a year before I sell, and I'm getting ready for that next bull run. And I'm going to pull that trigger starting at the 50x mark. So when it surpasses $50 million, I'm going to start to pull that trigger, right? And I'm going to start selling. And I'm going to start selling just like I'm buying right now, incrementally. And as the price continues to go up, because I think it will go way above 50x. But that's the safe point. That's way above the tax threshold. So that 20%, isn't going to hurt me too much when I've sold that amount of money. So I feel the safe way to do this is to put aside the tax money as you sell. So let's say you sell $1 million worth of crypto. Well, right off the bat, put $200,000 aside to pay those taxes during the next tax year. Because the next tax year, it's likely that the price is not going to be the same place. And you're not going to be able to easily just liquidate some crypto at that price range. Otherwise, you're going to be selling a lot more of your crypto at a lot lower prices than you would at this bull run peak, right? So I really feel it's strong. And this is having learned this through the last bull run cycle, to sell that tax crypto money and just hold it. It's very difficult for me to hold it and not buy back in more crypto. Sell that tax crypto money and hold it in a separate account, whatever you need to do, US dollars, some kind of stable coin, probably not Tether, probably DAI stable coin, or US dollars in your bank account, and save that for the next tax year. So you can easily pay your taxes. You're not worried about that. You're not stressed about that. I got that set aside. So then at that point, everything's pretty safe. Every amount that I liquidate at that point, I'm also setting aside the taxes for simultaneously. So I sell $1 million of crypto here when it 50x's, and 200,000 of that goes to my taxes. I don't ever touch that. And then it goes up to 55x, my original point A, and I sell another $1 million, and then I put 200,000 aside, etc. You see where I'm going with this? And my plan is at the end of this, I want to have sold about 40% to 50% of my total crypto holdings by the time we reach that bull run peak. And I want to have that 20% taxes set aside in another account to pay for it. And that more than covers the taxes. And that gives me such a large amount of gains that, the taxes is covered. We at that point ride the bear market back down, and we wait for however many years that is. And at that point, start buying back in when we feel like we're getting near the bottom. And the thing about this is you don't have to be a total perfect rocket scientist with your math. You don't have to sell at the exact peak, and you don't have to buy at the exact bottom. If you're within the top 10% or 20% on the way up, and you're at the bottom, when it's crashing down and you're in your bear market, at the bottom 10 or 20%, you're gonna make huge gains. So just do your best, but don't miss the boat by trying to be perfect. That's why I say sell incrementally as you go up toward that bull run, and buy incrementally on your way down toward that low on the bear run. And in that pattern, I think it's possible to markedly increase one's holdings. And so I'm trying this. This is my plan next tax year. I'm reminding myself, start those sells at the 50x mark of my point A holdings and continue on up as it rises, and set that aside, because at that point we should be so safe that it's guaranteed, more or less, that the price is going to go back down below that 50x mark. I mean, look at this last bull run. We had Bitcoin hitting about $20,000, and it's gone down to, so far, about 3,500 at the low. We're talking 80% plus drops from the all-time high. So if you had a 50x increase on your original investment, and then you sold within that top 10 or 20% when it was peaking out at the next bull run, you're going to be so set to rebuy when it crashes down into that next bear market. So let me know what you think. What are some good strategies for maximizing capital retention for your crypto, your hard-earned crypto gains? Because we do work really hard for these. And it's a shame that Uncle Sam comes in and takes a tax cut, because we did all the research, we did all the risk, we did all the initial investment. And it's just like when you work and you get taxed. It's essentially getting stolen from your hard work and your energy and your thought and your mind and your intellect that you put into this. But we're taking that in stride. And with that even in the mix, we're going to succeed with the tax men on our heels, because we're going to do that legit by the books. And we're still going to come out way ahead. So what are your guys' strategies for making it big, for maximum capital retention in light of the bull markets and bear markets? Please comment below. Thanks for watching.